The markets rose over 1% here today, but then again, maybe we shouldn't be surprised by that. After all, today was the first day of the month, and as I've mentioned to you guys several times over the years, the first day of the month does tend to be an up session. Strangely enough, throughout history, if you average them all out, the first day of the month is typically one of the strongest days throughout the entire month. And so it was good to see that little boost here today after a bit of a sell-off yesterday. We did have some corporate news after the bell tonight. Officially, Salesforce.com is buying Slack. Of course, we saw yesterday S&P Global with their own big acquisition of ticker symbol INFO. So we've got that going for us. We also have some strong manufacturing numbers out of China and then some good vaccine news out of Europe. So for the most part, we had some pleasant data here today. One little fly in the ointment is that the VIX did close a little bit higher today, but not by much, so we won't make too much of that. But all in all, a strong session. So we'll see what that means for our posture here today. Then we'll get into the trade application example where I wanted to share with you a dividend aristocrat stock that has started to make a move higher up until the last 3 days, and wondering if this is maybe an opportunity to look at a sold put for it. So let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's December 1st, 2020. If you're new, first of all, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, go down to our description area, and sign up for our email distribution list. We're also heavy users of Twitter. Make sure you're following me if you're not doing so already. My handle is @BrandonVanZ. We really appreciate those of you that click like and retweet on these Market Outlook related tweets. Last but not least, we have a presence on Facebook as well. Feel free to join our group at that web address you see embedded in the logo in front of you. All right, let's jump into the activity here. And as you can see, I've got chart 6D pulled up here in front of us. I tend to start with this chart if we have at least a 1% move either up or down. And today, of course, as I mentioned before, was an up move of over 1%. And so we can kind of see what that looks like in this middle tier here, where we've got this nice towering green bar up and over that blue horizontal line there that signifies the 1% price move. So as we kind of take a look at the activity here, particularly, since the end of October, so basically all of November, right in this general area that I'm circling, you can see a lot more of those green towering bars than you see the plunging red ones, and that signifies a fairly strong market. As we've been kind of mentioning in these presentations throughout the last month, there's been some areas like oil and gas that have really started to take off, a lot of recovery plays and reopening plays, and just seems like we've got more broad participation right now than we did earlier in 2020. So it looks like the markets do want to end the year on a strong note, although we all have to acknowledge that this is still a headline-driven market and anything can come out of the blue at any moment in time. But right now, things are looking pretty rosy as the S&P 500 did officially close at a new all-time high here. You can see that we closed at 3678. Also down below, it's hard to decipher here because this is kind of skewed, but there is a slight little tilt higher there on that purple line. What I mentioned there in the intro, just to confirm it, the VIX did rise just a hair here today. It ended at 22. But we're not going to read too much into that. It was already at aggressively low levels compared to where it had been just at the end of October when it was at 40. So it's kind of fallen by half since then. It might be kind of reaching its bottoming part of where it wants to reside right now. So I wouldn't read too much into the slight pop higher that we had in the VIX today. Otherwise, pretty strong performance out there. Reminder that when we look at market breadth, one way to kind of digest that is up here on the Market Watch tab. Clicking on the Visualization tab, on the watch list, I've just pulled up the S&P 500 public watch list here, and you can see that there were 382 stocks that finished higher in the S&P 500 today, 120 finishing lower. So all in all, a very strong market breadth day as well, with some bigger movers. As you can see out there, these taller bars like Cincinnati Financial had a big move and Capital One. So kind of seems like, and there's Discover. Some of you might recall that one of my best market outlook trade ideas of all of 2020, speaking of which, was Discover Financial. You'll recall that I bought those call options in the spring when things seemed disastrous out there, and those things have absolutely exploded in price higher. So anyway, great to see those financial stocks livening up here today. Speaking of which, we did cover the financial sector in my dividend growth investing class earlier today. So for those of you that are premium or plus members of Market Scholars, that recording is already posted to our calendar. Feel free to go check out that head-to-head matchup between a investment management type of a firm versus an insurance conglomerate. Anyway, let's go ahead and get into our normal routine of charts now. And coming back on over here to, how about we do chart 4B to get kind of a four-grid view of what's happening with the U.S. equity markets here. And as you can see, we did have a new high on the S&P 500. We did have a new high on the NASDAQ Composite. Remember, it wasn't too long ago the NASDAQ Composite was a little bit of a laggard there. So they kind of, sat out a bit of time there compared to some of the other indices. But it's really ratcheted up here in the last, let's call it, week and a half or 2 weeks. In fact, I did see some impact on that in my factor selector information that I'll be sharing with my class tomorrow morning, my swing trading class that I do on Wednesday mornings. We saw a positive movement within the momentum category that had been kind of lagging there for a bit of time. So starting to see some of those growth stocks move back up in the upper direction there. And of course, it helps when you've got a stock like Apple that is up, and I believe it was up today. Yeah, Apple was up 3% today, so a really aggressive move there for Apple. Remember, that's going to have a very large impact on the S&P 500, as Apple is the largest company in that index and therefore the most influential on the overall price. And of course, it's also a big company within the NASDAQ Composite. So I think Apple kind of helped that along here today. Now, as you're looking at these various indices here, you'll notice that they mostly look alike right now. We don't really have too much distinction between them. All four of the charts have green 30-day moving average constituting price above a rising 30-day moving average, so that's a bullish sign. We also have green background colors behind today's candle on all four of these charts, which constitutes a strongly bullish posture from the market forecast perspective. And when I say that, I'm referring to the green line specifically. So that's kind of our default posture setting mechanism for this video, unless you hear us say otherwise. So you can certainly look at the other lines, but we tend to think the green line is the most important one. And you can see that in all four of these charts, the green line is in the upper reversal zone, and so we consider that to have a strongly bullish posture, not just a weakly bullish posture, but a strongly bullish posture. And as you can see, that's been the case for quite some time. It's not like this is new information. In fact, for the Russell 2000, we got a strongly bullish posture on November 3rd, right before the election, and of course have powered straight through after the election as well. So this has been a pretty good run for those of you that have paid attention to that posture setting mechanism that we all have available to us there. One last thing I'll point out before we move on to another set of charts is be aware that the NASDAQ Composite did have what's known as an overbought cluster signal here today. Now, just like I mentioned the last time I did the video, or maybe it was a couple of times ago, I can't remember which one I said it in, but anyway, point is, the overbought cluster signals, you got to be a little bit careful with those because they don't tend to have reversion to the mean moves quite as often as you'll see with the oversold cluster signals. Like down here with the Russell 2000, we had a nice oversold cluster signal. That was a perfect time to be buying that index right there as it then reversed course and actually changed the trend. So those green ones I personally pay attention to a lot more than the red ones. The red ones are interesting to note and they could certainly lead to something, but I don't tend to look at them as a likely candidate of a reversal until I start seeing other signs in addition to that on the chart. So be aware of it, but we'll see if it means anything or not right now. Obviously there's a lot of bullishness in the air and we're in a seasonally strong time of the year as well. So right now, if you're shorting stocks, you're probably having a difficult time with that, considering all the other signs of bullishness we have out there. Let's go ahead and take a look at the three green arrows chart now. And three green arrows is right here. Now, I did get a question from actually one of our newest premium market scholars here, just here earlier this morning, about how can he learn more about the three green arrows system. He recalled learning it with the prior company that David and I were at about 5 years ago. And I mentioned to him that there's a really great thread within the technical analysis forum on our website where one of our students has kind of cobbled together a bunch of the subject matter that David Settle has taught on his technical analysis classes on Fridays, where he takes a deep dive into a lot of the different technical indicators out there. Many of you know that David is a chartered market technician, so he is wise beyond his years when it comes to that sort of thing. And so just a friendly reminder to take advantage of the various forums that we offer if you are a premium member of Market Scholars as well. Anyway, as we're looking at the three green arrows setup here, a reminder that it's just simply three different technical indicators, and whether they have a green arrow or a red arrow signifies whether those particular technical indicators are considered bullish or bearish at this moment in time. And so as we look at these charts, we do have 2 out of our 4 charts with a 3 green arrows signal. And those 2, no surprise, are the 2 that hit all-time highs today. That is the S&P 500 up here. It got a new 3 green arrow signal today as the MACD histogram closed back up above the 0 line. With the NASDAQ composite, we've had 3 green arrows ever since November 16th and have continued that mode all along the way. These other 2 charts to the right, we do not currently have 3 green arrows on. We have a mix of green and red arrows. With the Dow Jones, we lost the momentum on the MACD histogram here on, let's see, I think it's the 30th of November right there. We got a red arrow in there. And then it was just today that we lost that momentum on the Russell 2000. So we'll see where that takes us. Obviously, the trends are still quite bullish. So it's not anything that we need to be fearful of that, hey, this is a trend-changing moment or anything like that. Remember, every great market rally has to have a moment where it takes a deep breath once in a while. And we've had some pretty significant bullishness out of the Russell 2000 for basically a month straight. So I don't think anybody would blame it for taking a few days off and catching its breath before perhaps making another move to the upside. So right now, 2 out of the 4 charts do have 3 green arrows, and that is the S&P 500 and the NASDAQ composite. All right, let's go ahead and pop on over to the internet here briefly. I did want to say thank you to those of you that clicked like for me the last time I did the video, which would have been actually a week ago since Thursday was Thanksgiving. Obviously the markets weren't open, so there was no video that day. So 1 week ago on Tuesday I did the video. And since then, 105 of you have clicked like for me there on Twitter. I really appreciate that. I'm always shooting to get at least triple digits there to make sure that it's worth my while to take the 2 hours out of my day to do these videos. So if you appreciate these videos, that's the one request we have out of you. These are free for you. And so if you get value out of them, it just takes 5 seconds to click like on Twitter. And on that particular video, I traded a very interesting stock, Cryoport, which was that company that's going to perhaps help transport a lot of those coronavirus vaccines. So it's kind of an unknown company that many of you probably had never heard of before prior to listening to the video. And that trade is already up about $500 the last I looked here today. So in my eyes, a $500 win there is worth 5 seconds of your time to click like for us on Twitter. So thank you to all of you that continue to do that. Also, over here on the right-hand side, you'll see in some of our recent posts area that David updated our December trading rooms registration links here this morning. And so if you are a premium member of Market Scholars, you would have received an email from us this morning. If not, feel free to click on this link that you see right here, which will then take you to this area of our website. And one thing I did want to point out is that earlier today I did produce a tutorial video to to help those of you that are new understand the registration process, because sometimes it gets a little bit confusing there, and I just figured a video would help explain that a little bit better than I can do if I'm just typing you an email or something along those lines. So particularly for all of you that just signed up with us over the last weekend with our big Black Friday sale, if you are new to Market Scholars, I would encourage you to check out that tutorial video right there as well, and that way you can get all squared away with getting registered for all of our December classes at one time to make it nice and easy there for you. Also over here on the Sector Selector, remember if you are a premium member of Market Scholars, you can access the Sector Selector whenever you want by coming over here to our Tools area of our website and then clicking on Sector Selector. I've got it pulled up here. There's an upper half and a lower half. The upper half kind of gives us a high-level overview. The lower half gets into a lot more details, so I will a lot of times share this upper half with this audience here on the YouTube video. And one thing I wanted to point out is that we had a massive move out of energy last week. Now in real time, I did see that energy has kind of come back down to the 7th slot. Remember, this is produced as of Friday night, so as it is now Tuesday, it's a couple days stale, and so far along the way, energy has dropped a couple of slots. But still, the fact that it is well off of the bottom, where it was a cellar dweller for eons, is noteworthy. Whether that continues or not is anybody's guess, but what we do know is that it has been a remarkable rally for oil and gas stocks over the last month, and it is causing some impact on sector rotation models that are out there. As far as what are the strongest sectors, they continue to be pretty much the same ones that they have been for quite some time, including materials at the top, industrials at number 2, and discretionary at number 3. And those have been the exact same rankings for the last 2 or 3 weeks. So nothing new to report there other than continued strength. Put a pin in that industrials for our conversation a little bit later in the video when I do my trade application example, but just recall that industrials is number 2 right now. All right, let's get back on over to the Thinkorswim platform, and let's do some 12 grid analysis. So I'm going to pop on over here to chart 5A, and we're going to look at the asset class 12 grid. All right, so as we're looking at this, a quick reminder that the background colors of these miniature 12 grid charts will be either green or pink and will tell us whether we have a bullish or a bearish posture. Now, if you ever see a lighter color, like we do in the case of TLT over here, that means that we have a weakly bearish posture as opposed to the strongly bearish posture that we see in a chart like the US dollar directly below it. Otherwise, you can see we've got 3 pink charts and all the rest are green. So most of our charts here on this first 12 grid are considered bullish at this moment in time. The one that really stands out to me is, once again, the 10-year US Treasury Yield. How many times have I brought this one to your attention over the last 2 or 3 months? This thing looks beautiful. Over and over again, I ask you to go through an exercise and pretend this does not say TNX here, and just pretend it says, growth stock de jour. If you would replace TNX with an exciting ticker symbol, you would look at this chart and you'd be salivating, because this thing is absolutely obeying that 30-day moving average. And what I mean by that is it is in an uptrend, and every time it pulls back, it touches the uptrend and it bounces up off of it, touches the uptrend off of it, touches the uptrend off of it, touches the uptrend off of it, and yet again touches the uptrend up and off of it. That's an absolutely gorgeous uptrend that we are dealing with there in TNX. And remember, we should all be cheerleading that as well. In this particular presentation, we currently have a bearish trade on TLT that I have still open in this presentation from several weeks ago. So we are happy with this activity that we are seeing, where interest rates continue to go higher. I spent a fair amount of time in my dividend growth investing class earlier today talking about interest rates and their impact on various financial stocks like insurance companies and how they can, in some cases, benefit them. So again, if you're interested in that topic, be sure to check out my recording from earlier today. When we look at some of these other graphs here, the U.S. dollar had a pretty ugly session, so be aware of that. The dollar, in a percentage basis, doesn't have major swings on a day-to-day basis. This was only a 0.89% move, but we have to remember there's literally trillions upon trillions of dollars sloshing around in the currency markets. So even a 0.8%, a 0.89% move can be an impactful one, and today was one of those. All you have to do is look at the size of that candle in comparison to most of these other candles over here, and you can see that today was an aggressive day. That was a big upside type of a day, and this doesn't even tell the entire story in the candle because we actually gapped a little bit lower to start the day on the UUP as well. Yesterday we closed at the highs. Today we gapped down to near the lows of yesterday's candle and then continued to push lower. So that was a very interesting move there. And remember, we've been seeing some really good success out of foreign stocks recently. And if the dollar continues to be weak, that is something that benefits foreign stocks. And so we should not be surprised when we look up here at the top rung of our charts to see EFA, which was up 2.35% today. Remember, those are your foreign stocks from the developed nations, things like, Europe and Japan and Australia. And then if we look at foreign stocks from an emerging markets perspective, they were up nearly 2% today. So despite how wonderful today's rally was in the United States, around the world, they kicked our butts. They were up even more. And this is not some sort of a new phenomenon. We've been talking to you about this for months in this video. You can see here that the EFA is up 10% over the last 3 months compared to the S&P 500, only up about 4%. Likewise, you can see EEM is up about 9.7% over that exact same time period. So, it's easily apparent to me that foreign stocks are doing a bit better than U.S. stocks right now, and a large part of that reason is likely what we are seeing there with that falling U.S. dollar. Now, the gold market did rise here today. It was up 2%, and again, remember, sometimes a falling dollar can positively impact commodities that are priced in those dollars. Gold's been a little bit strange because it was in such a strong uptrend earlier in the year, it really hasn't benefited from this downward descent in the US dollar recently, although today, of course, it did reflect that big down move in the dollar, equated to a big up move in gold. But it's got a lot of work to do before you can get enthusiastic about this chart. Gold did have several of those oversold cluster signals there, so maybe that will be an excuse to get it up and going here. But right now, the trend does look quite deficient, so I'd be very cautious around the gold market at this exact moment in time. It seems like everybody's Bitcoin crazy right now. For those of you that watch those altcoins and all that, it seems like a lot of those are starting to garner attention. So perhaps people are putting gold in the back seat at this moment in time. Let's go ahead and take a look at some other charts here. Let's take a look at the U.S. sectors 12 grid now. And as we pull this up, you can see we only have one pink chart on the board, and that is utilities down here on the bottom rung. And I didn't mention it explicitly, but some of you might have caught it when I was looking at the sector selector. Notice who the new cellar dweller is. It is utilities. It was once energy, but once energy moves off the bottom, somebody else has to replace it, and that is utilities at this moment in time. So I guess we shouldn't be completely surprised to see utilities be the one out of all of these charts that have the bearish posture according to the market forecast technical indicator. You can see here that the utilities sector is also the only one that can make the claim that they are currently trading below a falling 30-day moving average. Notice the color of that moving average right there is red. And again, friendly reminder to all of you that just signed up with us for premium accounts over the weekend with our Black Friday sale. Remember, you have access to all of these charts now that you see David and I using. And so make sure you set aside maybe an hour or two at some point to go through the process of importing all of those charts over there on the premium resources area of our tools tab. So that way you can follow along when you're watching these videos. But that is a sign that for sure the utilities are struggling on a relative basis there. All the other charts do have price above rising 30-day moving averages, and all of them also have strongly bullish postures, not just weakly bullish postures. Real estate is probably the one that is somewhat comparable to utilities in that it's not overly strong. You'll notice that the intermediate line on utilities is only at 57, but because it's rising, we still consider that to be a strongly bullish posture. Remember, if that were below 50 and rising, it would be a weakly bullish posture. So that one's probably the one that's right next to utilities as kind of languishing to a degree right now, at least on a relative basis. Healthcare also is one of those areas that really hasn't shown a whole lot of fight here recently. Now, granted, the last 3 days have given us a little bit of hope there because we've seen this nice bounce up and off of that moving average for healthcare, but it just hasn't kind of kicked it into high gear the way that it was earlier in 2020. Right now, the action seems to be in the more cyclical areas of the market where you've got the materials up there near multi-month highs. Industrials pretty close to multi-month highs. Discretionary up there close to multi-month highs. And you could really make the same thing with these charts up here as well. I mean, financials are right up there. Communications are having a breakout type of a move here today. I noticed that Facebook and Alphabet and some of those were making some nice moves higher. And then even technology, they're saying to us, don't forget about us, right? Because technology has been the strongest sector without a doubt for the last 5 years. But they've kind of taken a back seat here in the last month or so, where they've kind of been digesting some of those big gains. But all of a sudden, don't look now, but we're starting to make a move in technology again. However, there you will see one of those sneaky overbought cluster signals. We'll see if that slows down its pace. But it is good to see it kind of back up at these levels that we really haven't seen on a closing price basis going all the way back here to 3 months ago at the beginning of September. So all in all, quite a bullish set of charts we've been looking at here today. Let's get into our trade application example now. And for that, I'm going to go ahead and just pull up a normal market forecast 1 grid. This will be chart 4A for those of you that are following along at home. And the stock in question is going to be good old 3M. This is 3M company, one of the elite dividend growth stocks out there. Some of you that have followed me in my dividend growth investing classes over the years will know that this is one of the 4 faces of the dividend growth investing Mount Rushmore in my eyes. This is a company that has over 60 years of dividend increases. Quite an impressive feat there. It's fallen out of favor a little bit here in recent years as it's found its way into the courtroom a little bit more often than it probably prefers, but it's finally starting to waken up. It's kind of breaking out of its funk to a degree. What caught my eye with it here today was that we had a bit of a pullback after just hitting a new multi-month high 3 days ago. So we've actually given up about $10 from a share from high to low on the last 3 trading sessions. Notice that we pegged nearly 180 at its high 3 days ago, and then today it closed around 170. Now prior to that, we had been kind of in this sideways channel with 3M. You'll notice that we have a double top from right there, and we have a double bottom from right there and right there. So we're kind of doing this sideways chop type of a thing until we could finally make the claim that this was a chart that was breaking out here about a week or so ago. During this particular move right here, we were breaking above that prior double top. So that's usually a pretty bullish sign there. Obviously, it doesn't guarantee success or anything along those lines, but it is at least giving us a sensation that the path of least resistance for this stock appears to be to the upside at this moment in time. And you can kind of confirm that with that green moving average there as well, where that states that price is still above a rising moving average. And the background color of the chart is that dark green color, telling us that the intermediate line is still considered strongly bullish at this moment in time because it's still in the upper reversal zone. So I did a bullish trade on this, known as a sold put here today. And remember, for those of you that are premium members of Market Scholars, I already sent out all the trade information on this before the market closed. And that gives you guys the benefit of digesting this trade information before everybody else that's just simply watching the free video later at night. So make sure you're signing up for our Telegram trade alerts as another one of your tasks if you're one of our newer members. But those were some of the reasons that I liked this particular trade setup here. You could also make the claim that we have a bullish intermediate confirmation signal with the green line in the upper reversal zone, the red line in the lower reversal zone. Now you will notice that the blue line is not positioned in an ideal fashion. So although technically it is a bullish intermediate confirmation signal, we would not consider it one of the more ideal setups. Nonetheless, I thought it was an interesting choice for a put sell, particularly since I view its current dividend yield well above 3% as being fairly attractive. So if we could purchase it at an even cheaper price with an even higher dividend yield, I would be happy with that outcome. And so the trade that I did was a January 160 strike. And again, if you need the trade details as far as where we got filled at, check the Telegram app there for those of you that are premium members. But basically, when we are a put seller, it's a bullish trade where we are now on the hook for buying 100 shares of this stock at $160 if it continues to fall. If it doesn't continue to fall, then we get to keep all of that premium that we took in when we sold that put. But if it does fall below 160, then we're going to have to buy it at that price. Now, naturally, I'd rather buy it at 160 than at 170 if I'm looking at this as a long-term holding from a dividend perspective. So that's kind of the mindset behind the trade here tonight with 3M. All right, so that's what I had for you here tonight. Again, bullish charts pretty much across the board. At some point that will end, but right now it's not up to us to decide when that's going to occur. We're going to let the markets do as they will, and right now we're in a seasonally strong time of year, so we're thankful for the gains that we've made, and we're happy to see all that green on the charts there in front of us. If you got value out of tonight's video, if you appreciated the analysis, if you appreciated the trade setups, whatever it was, one thing you can do to thank me here tonight, and that's to click like for us on Twitter. Remember, I'll have this pinned to the top of my timeline. We also have it available for you to click on directly below the video if you're watching it on our website at marketscholars.com, along with putting the Twitter link in the description area of YouTube and also putting it in the email that we send all of you. So there's 4 different places to make it nice and easy for you to do that for us. All right. Until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.